So Kevin, for our viewers out there who are new to O'Leary Funds, tell us a little bit about your background and what your company is about.
You know, the genesis of the company was to manage my own wealth. I was lucky enough to have a liquidity event a while ago when I sold the learning company to Mattel. It was a large transaction. There was about 14 of us as founders. We sold it for $4.2 billion, so it was a huge liquidity event for us. And I began to look for managers to manage my money. And I remembered a story, and it really affected me years ago. My mother, I was born in Montreal, worked at a company called Kitty's Togs. And she used to come home and tell my brother and I, because they pay them every week on Thursday mornings, she'd always invest a third of her paycheck into Bell bonds with coupons. She'd always say to me, boys, never spend the principal, just the interest. And never, ever, ever, ever buy a security that doesn't pay a dividend.
Right.
And, you know, back in those days, stocks paid higher dividends than the bonds. So example, you know, Bell Canada had a 6% yield on its 5-year paper, its bonds. The stock yielded 7 to entice people to take the risk to own an equity. And we got lost somewhere between the 50s and the 60s and 70s. And we actually thought that it was a good investment to buy a stock that didn't pay a dividend, which to me is insane. So anyways, I wanted to found a firm on that, my mother's basic concept, because, you know, she died a few years ago, and I was executive for her estate, and I looked at her portfolio, which she never shared with anybody, but 40 years compounded dividends and bonds. You know, 73% of the market's returns over the last 40 years came from dividends, not capital appreciation. And she knew that intuitively. So that's how we built the foundation of O'Leary Funds. We listen to Mom. We don't own a single security that doesn't pay a dividend. I will never buy a stock in my life that doesn't pay a dividend. If it's not returning cash to me, it's a speculation. And if a manager can't send me cash, I'm not interested.
Right. Well, you mentioned that often in your book, Kevin. And what's the typical investor like of O'Leary Funds?
You know, they're probably in their 50s, 60s, 70s, and even older. Their number one mandate to their own investment strategy is preservation of wealth. Secondly, it's income. And lastly, on the hit parade, is capital appreciation. Right. The only way we get capital appreciation is we find companies that are growing free cash flow. I don't believe in earnings. That's mumbo jumbo to me. I believe in free cash after CapEx. You tell me how much free cash flow you're making every quarter, it's the only thing I care about. I don't want to hear anything else, because if you're not, you can't lie about cash. That's what I love about cash. There's no vision, there's no story, there's just cash. And that's what I trust, and that's what I understand. So I find companies that are growing cash. I buy their debt, their prefs, their converts, their common shares because they're paid a dividend, and I wait in the weeds. I get paid every single quarter. Anything that doesn't pay me cash, not interested.